Welcome back to the Eric Krown crypto channel. Wishing you a happy and healthy start to this nice macro Sunday. That is macro Sunday, and it's almost 10 degrees Celsius here. Means absolutely nothing for me, man, because I'm gonna be inside all damn day anyways, except for a little bit of a quick trip to the gym that I'm looking forward to just a little bit right here. But before that, a bit of a macro analysis on Bitcoin. We'll also follow up on the short-term time frame analysis as well, more or less uneventful in the last 24 hours. But with that said, yeah, we're going to swing back into the Krown Trade application later in this analysis. For right now, I should let you know that we're in the last day of our 4-year anniversary sale. Insane stuff. I always have to think about this anytime that I even say those words, 4-year anniversary. Like, what the actual hell? I know I repeat this ad nauseum, but this place, it was never meant to be like this. Anyways, I'm glad that it is, because it's absolutely been the highlight, especially of my adult life. So I want to say a massive thank you for that. And perhaps we'll swing back at the end of this video here and go a little bit more in detail on some of the programs. For right now, I'll just say, hey, be sure to watch the promotional videos that accompany any one of them in the store there if you're thinking about investing, because they're going to explain, who they're for, who they're not for, what to expect essentially, so you can, make an educated decision for yourself. A good rule of thumb is that if you're on the fence on something, it's probably not a good fit. And more importantly, with all of them, they require a lot of a time investment on your own part, as well as financial investment as well. So understand that if you don't have the time to put into these, probably not going to get much out of them. So I think I'll just leave that right there. And let's get into the actual analysis of the day. So we'll start off with the short-term timeframes over here, picking up where we left off yesterday. Yesterday, I was kind of suggesting a bit of a range, maybe a bit of a short-term pullback. We got more of a range, not necessarily a pullback, a little bit actually of a test towards the top side of our consolidation range, that being about 42,600 or so. Looks like Bitcoin did hit a high of about 42,400 and change or so right there. Yeah, 429 it looks like on MEX. Anyways, as far as that goes, I don't really have too much to add on to that. That already hasn't been said from yesterday to today, except for the fact that obviously CME opening up later today does put in the likelihood that we probably stick around this area until CME opens up a little bit later. Keep in mind that CME did close the week on Friday at 42.95. So, Bitcoin probably stays around here, and then I actually would be looking for a little bit of a pullback a little bit after CME does open. Kind of the same thing as yesterday again here too, but I'm not super married to that idea. The idea that I'm very much married to right now, not that you should really be married to any ideas, is that any sort of a pullback that fails to go below, especially about 40,000 bucks, or if you want to be super exact, 39,900, I'd look at it as just another higher low and very likely leading towards at least one more try to the upside, of which that's where things get rather exciting. In the short term, can Bitcoin pull back to 41.5 or even $41,000 even? Yeah, absolutely. Wouldn't really change too many things over here, but ultimately I do look at Bitcoin as more likely to give another try to the upside, barring that criteria being met. Again, a very specific interest on the area of $40,000 or 39.9 if you want to be super exact with it. Until then, we can go check out stochastic momentum on the shorter term timeframes for CME specifically, because that one typically does get things right at the beginning of the week when CME opens back up. And we do see right here that 4-hour stochastic momentum will actually be remaining to the upside as long as Bitcoin is above 41,200. If we go over here to the buy hourly, we will see that it is also actually vertical above about 40,700, and hourly is going to be a little bit up there at 41,830 or so. So, if we do start to see closures below about 41.5, 41.6 region, then I would be looking for the next short-term pullback down somewhere just below 41,000 bucks, let's say. But ultimately, I do think that Bitcoin has at least one more try to the upside, of which that is where things get a lot more interesting for the short-term timeframes. It's the same areas before, essentially 42,600. Any sort of especially a 4-hour closure above there, essentially even taking out that 9th March high right here. And I would be looking for the next, $2,000, maybe even $3,000 move to the top side of the greater range highs. These are the range highs going back a couple months now. Between about $44,000 to $45,000, and that's where things get a lot more interesting for the higher term timeframes, which we'll get into soon enough here. Now, I should also denote what I would be looking for if things do invalidate and fulfill the downside below 39,900. I would be looking for an ultimate move actually all the way back down somewhere into this blue box between about 37 and 37.5. Bounces along the way, obviously, as always, things don't move in a straight line. Probably one at about 39 even or so, or 38.5, but ultimately I would be looking for things to come down down here, and probably more over a longer period of time. But for right now, I do still think that the probabilities lie with the boo laws. The only thing that's really making me kind of reconsider that right now is just a simple fact that it seems that the ghost town that crypto Twitter and crypto YouTube are right now, at least for the people who are still around, they do seem to be a lot more on the bullish side, which, obviously you can't always just say, oh, well, everyone's bullish, so I'm bearish. It's like, no, because that was actually working quite well in the first part of 2021. But there's also, that's also a very myopic way of viewing things. As far as the market is concerned, as far as sentiment indicators go, as far as something that's actually fucking tangible, it does seem that the market is still very much fearful right here at a 28 read, which is the highest that we've seen in a couple weeks, or at least a week and a half, it looks like. But ultimately, that is still very much fearful, and you don't typically see that when everyone is bullish, for example. So I do think that does kind of speak for itself. Anyways, in this case right here, again, on the short-term time frames, above 42.6, good. Looking for another, $2,000 to $3,000 move to the upside, somewhere between about 44 and 45 or so, and to the downside below about 39.9 or 40,000 bucks for the blue laws. Obviously bad. Looking for an ultimate move down to about 37 to 37.5 with bounces along the way. Until then, short-term time frames, probably another spike short-term to the upside. I'm not necessarily convinced that we'll actually complete that move as of right now, but and then probably a pullback, around time that CME opens, something like that. It's kind of what I'm looking for. I'm not super married to these ideas right now. What I am a lot more interested in talking about on a video like this is the higher term time frame, long-term analysis. So I just want to make sure that I hit all my notes over here as far as looking at CME. Yeah, 6 hours actually going to freshly turn up above 41.5 as well. And 12 hour I know is already up there above 40,200, and daily is going to freshly cross up above 40,500. So assuming that Bitcoin just doesn't pop back down below those regions by end of day today, I'm actually looking at, the more that I look at this, Bitcoin probably trades a little more sideways and probably gives another try to the upside. The daily right here, specifically for the advanced stochastic, is actually nearly getting a perfect signal, dare I say. We see extremely low ADX, we see extremely low HVP, and the DMI is already flipped to the upside, and the stochastic is also flipping to the upside as well, even playing out a bit of a trendline test going back from here. And this would be a rejection of the bearish control zone, which would actually be extremely powerful if we start to see the ADX and HVP especially start to turn up simultaneously. Until then, again, short-term time frames probably more sideways here. I think the best way to be looking at this is full hour BBWP, wrangled back down below that moving average. Didn't even get back above 50 percentile, so that does kind of tell us, hey, we're still consolidating, we're still looking for a contractive move, which in the context of our current price action is going to be probably sideways here in a range between about 41 and 42 and a half or so. All right, cool. Yeah, so I think we've got that right there. Keep in mind all of those validations and invalidations and sort of the pivot points for the momentum on those time frames. Also looks like we could very easily print a drive of hidden bullish evidence here. If Bitcoin does confirm a local low, how would you confirm a local low right here? Kind of difficult to do with the way that price action currently is, but maybe another 4 hour closure above about 42,150 would probably do it, and then that would very likely get the next test towards the top side of this area. All right, sweet. So that was nice and short and sweet. Let's get into the higher term time frame macro analysis now. So I want to start off with the most simplistic thing. Not because I don't think that you're capable of understanding more, but because a lot of the time the most simplistic thing is usually the right thing, to be quite honest with you. And in this case right here, I want to look at both the 6 month, the semi-annual, and then the yearly charts. The 6 month, obviously not closing this month, but at the end of the next quarter, as of right now, would just be a backfill on the last 6 month open, or sorry, the last 6 months open. And well, that typically is a bouncy area. When you look at this from the more long-term view of it, a lot of these backfills have actually been some pretty powerful points. In fact, every upside move has always backfilled on the prior open. So this one, it is, in hindsight, it is no like crazy thing that it came all the way down to 34,000. If we go over here to the yearly, it is very much obviously a backfill right here. And again, it just makes it very difficult to be bearish as long as we're above that region long term. Now, I can create a very, very strong bearish case, and we're going to do that actually, because it's always very important to be, aware of the, aware of the different routes that things can go. Obviously, support it with evidence, and then come up with validations for when those scenarios become, well, extremely likely. So we're going to do that soon enough. But in this case right here, I think this chart kind of speaks for itself as of right now. Anyways, and then are we closing a, no, we're not closing a bi-monthly at the end of this month, but yeah, there's not really much to talk about right there. Quarterly, obviously coming in at the end of this month. And for right now, we don't really have too much to be spoken about. It just looks like one macro consolidation. And I don't think that anything else needs to be said in this particular case. So let's get into the next point. The next point is going to be, once again, referencing the monthly accumulation distribution indicator, this indicator right here, of which this indicator, the slope change of it, especially in the extreme green zones and the extreme red zones, have correlated actually 100% to macro shifts in direction. Now, it doesn't time these perfectly, but it gets the general phase of the market cycle incredibly well. So what I've done here is I've put green vertical bars on all these inflection points, and then you can just look at the chart, and I think that is the most is the easiest way to explain this, in the sense that, hey, anytime that we have seen these changes, those have been your macro shifts in direction. Again, not the best timers, but generally gets it rather well. So, for example, and one of the more interesting ones to myself actually is one that I, for whatever reason, it's not marked off right here, but I know for a fact that I should have, that I would have. But that would be coming off of this area right here, where we actually did see a shift in the slope of the accumulation distribution indicator in January going into February of 2020. That was one, or a little bit more than 1 month before, of course, the Rona dump in March. And that was telling you essentially, hey, this ain't the move that you're looking for. This is, probably going to come down. Now, obviously, it couldn't have told you that's going to come down that much, right? But hey, in this case, that was rather well, rather potent, you might say. And then, of course, just a few months later in May, we get the upward slope shift right here, and then it was onwards and upwards basically for, basically into this last major market move. So again, pulling it out so you can see everything in front of your face. We do see, or the reason why I'm bringing this up right now, is that the monthly accumulation distribution indicator has actually gotten an upward slope. I forgot to mark off the most recent downside one as well. Again, not perfectly timing it in this case, to be fair, but we do see that it's getting a positive slope right here. Now, there is one big counterpoint to what I'm saying right now. All of the good iterations in the past have essentially come within, the critical zone, or, like a deeper zone on the opposite side in this case. So what I'm trying to say in a very backwards way is this: if you're really looking for it in the more historically relevant way, we'd actually expect this to be happening, this slope change to be happening in the red zone, like you saw here in May, like you saw here in March 2019, like you saw over here in August 2015, and over here in May 2012. The only time where I can find something that is relatively similar to this area is coming out of the June 2016 to October 2016 correction, where we did see this slope change in the very shallow end of the green zone back to the upside. And that was essentially coming after the completion of this reaccumulation phase, or if you want to call it the bear market between 2014 and 2016, essentially. But you can see a few similarities between what we're looking at right now and this, in the sense that, Bitcoin was essentially in one major massive macro range, this accumulation range between about 700 or 666? Oh my God, it's the devil's dick range, and about $200 to the downside. Same thing over here in a way, right? We have our highs at about 60,000. We got our lows at about 34,000. While it is a humongous range on a percentage basis, has just essentially been that. We haven't really been seeing trend on a particular, on a time frame like this. So my point is that the one iteration that I can kind of compare to this, I guess it would be quote unquote good for the Bulos as well, but one time does not make a trend. That is for certain. But I do think that it's worth talking about within the context of all the other things that we're going to talk about as well. Now, the big one that I've been harping on a lot recently, which is which I put a lot of weight on, and I really don't think that things need to be even more complicated than this, is my volatility versus momentum versus trend chart right here, which is going to be on the 5-day for Bitcoin. And what I've done is I've started first with volatility in the sense that we are looking at extremes as far as 5-day BBWP goes. BBWP measuring volatility, of course, which is a direction neutral indicator speaking towards essentially like the severity of of these moves. So, it measures the dispersion of returns, right? So theoretically, when volatility gets very, very low, aka contracted, it's setting up for a massive expansion phase, and that essentially means very violent price action, and that typically equates to major breakouts or breakdowns. And so what I've noticed is that over the past year and a half here, going back to even May 2021, and we can go further than this, by the way, we can certainly do that, but I can assure you that it's more or less the same. So I didn't really think that it's that relevant to do. But in this case right here, we do see that anytime that it's kind of come into these teens and especially lower, the expansion from those areas has had a very, similar historical effect. So in this case, what I'm going to do is as you've seen, I've put these green vertical bars where these lows are on the 5-day BBWP, and then I've lined it up with the chart right here. And on the chart, you can see that these essentially precipitate, some pretty major moves on price action. This first one obviously correlating to that 48 spot 30% move to the downside over 45 days. The next two ones took about 35 days, as you can see, and the first one was 42 spot 29. The second was 46 spot 75% move to the upside. Then, of course, the more recent one in December was to the downside, about 42.17%. I'm going to show you one from priorly before as well. We can mark off these two guys right here from July 2020 and then October 2020. In July 2020, we did see this move, obviously, and off of the expansion phase, which did take, guess what, 35 days from, again, that major low to the next major high, again 35 days, so very similar, about 40% right there. I don't know if I did that exact. Maybe if I really get my magnifying glass out and do it like that, around 40%, so very much comparable. And obviously we have this one right here leading out of this base, and that one to the next major high, I would say it's right around here, took about 35 days again. A little bit over 50% in that case. You could even send that a little bit more, to be fair, but my point is that you are seeing very, very similar moves based off of these signals just on BBWP alone for both percentage and time taken. The downside signals have taken, on average a little bit longer. The upside signals have taken a little bit shorter on average. So, if we were to just kind of play around with numbers here and add that, let's just say 45%-ish from our current levels, off of that, presumably next expansive phase on BBWP, then the upside target would actually be $56,000, and the downside target would be about $23,000 from that price point on an average of, to the upside, it seems like 35 days seems to come up quite a fair bit. To the downside, obviously, about 45 to 50 days, something like that. So about a month and a half or so, let's say, from the expansion date. So in this case right here, have we seen expansion just yet? No, we haven't, obviously. Not until that BBWP gets at minimum a positive slope and preferably crosses the moving average on it. But just the positive slope is probably enough. Anyways, what I've done here is then I put a momentum oscillator on the chart, two of them actually this time. Usually I've just been speaking about the stochastic. We're actually going to focus on the RSI as well today. And what was I going to say? Let me take a sip of this damn water, man. Haven't had enough coffee because I haven't had any coffee for days now. It's insane. If you're thinking about quitting, just don't. Just don't quit, man. Don't be a fucking quitter. Just keep on drinking it. And, well, you might want to take some time off every once in a while. Okay, there we go. All right, my throat feels a little bit better. Okay, so cool. This is the stochastic. Yes, we call it the advanced stochastic, made by Mr. KBDB with a lot of other bells and whistles, but we're just focusing on the stochastic part of this, of which, again, these green vertical bars correlate with those shift in momentums. Maybe even we plot out the prior two ones as well, just to see, because I haven't actually prepared this right here, but I'm just curious. Okay, so we got that one right there. And we got this one right here, and well, I can already see on pane that looks like they worked out pretty fucking well, huh? Anyways, focusing on the last four iterations, and then we'll get to the current one. We have seen that the direction of the stochastic plus the positioning of the stochastic has well correlated with the actual move itself on that expansion phase. So for example, in May of 2021 on that downside move, obviously the 5-day stochastic was losing the bullish control zone here and crossing down, or it was already crossed down, but just kept on heading down at the same time. So that one worked out rather well. Then we have kind of like the opposite but equal response on the other side with an upside signal. Again, this one did correlate to the upside move right here, obviously, from, it was like 37 or so to 53 or something like that. And it was also getting out of the bearish control zone. So kind of the opposite of that signal, but both very powerful in and of themselves. Then the next one, again, to the upside, not just a fresh cross on that low BBWP signal to the upside, but also holding within the bullish control zone. And then the more recent one in December, that was crossing down, obviously, and losing the bullish control zone at the same time. And just for those other iterations, which we can point out right here, might as well, we're right here, right? Again, crossing up literally as we hit those lows on 5-day BBWP. Same thing right here. This one, both of these are kind of happening in the neutral zone, so I wouldn't make too much off it. But the fact that they crossed upon that expansion and then led into that, next 40 to 50% move, so that is, seems very steady. Anyways, the reason why I'm pointing this out is because on our last low for this 5-day BBWP, which again has not expanded just yet, so only if we do see the 5-day stochastic turn down, which we can actually forecast that number. Oh, spoiler alert, it's right there. But until that happens, I guess I would have the probabilities in the favor of the boo laws here just for that fact alone, in the sense that the 5-day stochastic is still headed to the upside here, and it's getting out of the bearish control zone as well. So as long as Bitcoin is above $37,000, at least for this next closure, and obviously that's going to change for the closure after that, but we can only forecast so far ahead in advance, right? But as long as Bitcoin is above about $37,000, essentially, that condition will remain, well, uninvalidated, like not invalidated. That's what I'm trying to say, meaning that the favor still lies with the boo laws. We can also do this as well. I thought that this was kind of interest here, in the sense that we do have the 5-day RSI also saying a few interesting things about this price action as well. Now, I think that the stochastic is actually better for this example. I think it's just more visually, it makes more sense visually. But I do think for some of the people who are more comfortable with the RSI, there are a few things here that are, I do think rather profound. So in this case, on the May dump-ola, Bitcoin was, the 5-day RSI was just losing the bullish control zone and getting rejected right at it, So it was kicked out first and then that rejection afterwards. It's typically what you see, by the way, on those beginning of major downtrend moves or any downtrend move for that time frame. And then to the upside over here in August, what do you know? The 5-day RSI was just getting back into the bullish control zone. First test gets, spit back out, right? But, that move was still valid the whole way through, and that 5-day RSI remained within the bullish control zone. And again, in October on that higher low at $40,000 right here. Again, the 5-day RSI was within the bullish control zone, stays within there. Yeah, cool. And it wasn't until we get the next major signal in December where it gets kicked out right here. It gets that rejection right around the bullish control zone and then down. Anyways, for right now, is there anything to be made out of this on our current trajectory? It's right at the neutral zone, so it's not as obvious as the past bullish signals. It's also not necessarily a bearish signal, or it's not a bearish signal as well, because I don't see it going into the bearish control zone. But I would suspect that if this does really start to get above the neutral zone, which we'll have a chance to see, not tonight, we get our next closure tomorrow night actually, then I guess we'll get some insight as to whether that's actually going to surpass or not. But obviously getting above the neutral zone into the bullish control zone would be the next sort of, piece of the puzzle for that particular one. We can also look at the other ones as well, kind of similar in this case, moving up or back from the neutral zone into the bullish control zone there. But this one's still a bit more of an outlier more than anything, or it's not that it's an outlier, it's just I don't really have much other history to be going off of in this case. Anyways, I want you to put these numbers in the back of your mind right now, or you don't have to do fucking anything. You should probably just turn this video off for all that you should be concerned with. But what we can do is we can actually provide some other angles to be looking at it that perhaps help confirm the picture with these two targets in mind. Let's say within 40-ish days, 40 to 45-ish days. Looking at the amount of time we've been recording, 24 minutes, kind of long, but fair enough, man. So we'll go back on over here and we'll go to this chart and we'll start off with this. We'll start off with the bullish look. And for the BULAs, we do see that there is very obviously a potential ascending triangle being constructed here, coming in from, you know, the lows of January and February. And that would have a resolution above 44,500 or $45,000 on a lower time frame. But if we're using, you know, higher term time frames, 44.5 probably okay. And because it is an ascending triangle, which is a reaccumulation formation, it has a natural implied target, which is $56,000. Very fucking interesting right there. On top of that, that would also be directly in line with the 3.272 Fibonacci extension here. So good confluence in that regard. And you know what we can also do, and I actually haven't prepared this as well, so I don't know what the fuck this is going to spit out, but what we can do here is we can actually forecast what the RSI would look like. What would the RSI print if Bitcoin got to that number? Now, the problem with this is that we can't forecast more than like one bar in advance, so this is not going to be super accurate, but perhaps it might be interesting. Anyways, what I want to know is what price would force this or let's go to this chart. What price would force the 5-day RSI, because that's what we're looking at right here, basically back around the bullish control zone. So I'm going to put that at about 60. So in this case, let's see, where is we can just do 60 even. Just anywhere around there is good enough. And let's see, enters bull zone above. So yeah, the 5-day RSI will actually enter the bullish control zone above, just below $51,000. That is also very interesting to me because on the weekly right here, obviously if that condition is met with Bitcoin closing above 44.5 or $45,000, whatever might have you, the weekly and the 5-day will naturally confirm the weekly will naturally confirm another drive of hidden bullish divergence on this chart right here. It's not there just yet, but you know, getting back above the exponential is probably good enough, to be honest with you. But hey, you know, it's not there just yet, so I should say that. And it would naturally confirm another drive of hidden bullish evidence, and that does have a natural target or a technical target. The first target would be right around this little stutter step right here, which is about 50,800 to 52,000. Yeah. And it would have a more deep target, like a more aggressive target towards about 57,300 or so. Anyways, for what it's worth, and also it would confirm another higher low along the way, and you know, that's would probably be good for the BULAs. So I do think that holds some weight, and I do think that holds some interest as well. And then I also think that there's something just kind of off the cuff here that needs to be said as well, or it doesn't need to be said. Nothing needs to be said, but I just think it's interesting, right? So you know, when we look at all these market cycles in Bitcoin over the past, like 12, 13 years, you know, all of these market cycles have had essentially diminishing returns in the way that they play out their cycles, meaning that cycle number 1 had greater returns than cycle number 2, for example, and then they also take longer over time as well. And what's interesting to me about this particular one right here, and the length I think is a little bit less well documented, to be quite honest with you, but the gains I think are rather well documented. In this case right here, keep in mind, Bitcoin's played out 50% downside moves in the past year. Like, there's a lot of people, when people make the argument of like, is Bitcoin in a bull market or a bear market? It's like, fuck off. You can't tell me that Bitcoin's in a bull market when it plays 50% downside moves. You also can't tell me Bitcoin's in a bear market when it plays out 2x moves twice in the same fucking year. It's ridiculous. It's absurd. See, these are conversations, in my opinion, that people have to basically have like a talking point so that other people can just like, you know, latch onto it, which it doesn't mean anything for like a real, okay, I'm going to say something a little bit more serious or a little bit more direct here. It doesn't really mean anything for like a real fucking trader. Like, are you fucking kidding me? 50% moves to the downside and 100% moves to the upside. Are you fucking kidding me? Those are very tradable. Okay. I don't care if you're a long-term investor. I don't care if you're a short-term time frame trader. Those are moves that you cannot call, in my opinion, you cannot call yourself a reasonable trader or investor without looking at those and being like, hey, I need to take action on those, regardless of whether you call it a bull or fucking piece of shit bear market. And I don't mean that piece of shit bear market. I mean just piece of shit like bull or bear market. I fucking fucking hate these goddamn discussions. They're so, I dare I say this word because I also dislike this word as well, but that is the epitome of LARP. That is the epitome of LARP in my opinion. Look, when things go 100% to the upside, there's a trade to be made. When things go 50% to the downside, there's a goddamn trade to be made as well. And it's happened twice in the past fucking year. Like, for the love of God. I feel like I'm going crazy, man, but maybe I'm just speaking to myself right now. Anyways, my point is that, you know, if you're looking at that as like, well, Bitcoin in the past bear markets hasn't played out that 70% move to the downside. Well, first off, didn't get as much percentage to the upside in this market as in this market as well. And second off, I don't think it matters. I really don't think it matters. And I do think that you should expect that over the course of time, we should expect less impressive upside moves on those parabolic blow off tops, which we didn't really kind of got one here, to be fair. And you should probably expect less drawdowns to the downside as well as more people get involved and invested in this in a market like this as it matures. I think that's a very, very reasonable stance to be taken. But hey, if you have a different opinion, let me know in the comment section below. And I don't know, maybe I'm not considering something definitely possible here. Anyways, okay, so let's get on to the bear case. It's actually very, very simple and quite fucking powerful indeed. And there's actually one last piece of the bull case. Do we even want to say it? Nah, well, we don't. It doesn't need to be said. Monthly MACD, monthly PMAR, and monthly 20 simple. All three of these have combined for a 100% effective signal in the past. Only 3 times, I should say. But 3 times does make a trend to produce a pretty nasty move down to the green 55 exponential moving average. So what does the signal look like? First and foremost, we get the monthly MACD crossing the downside as indicated by the green vertical bars. Then we see, obviously the PMAR follows through after that, and then getting below the moving average. And then of course we do see, for the timing aspect, probably the most important thing, the white 20 simple being closed below on a monthly scale, producing that move down to the 55 each and every time. We've seen it, again, 3 times in the past, but 3 times is, relevant enough, I guess. Anyways, well, we already have number 1 and 2 of these. The monthly MACD is crossing the downside right here, of course. And then we also see the monthly PMAR below the moving average right here. These two combine together to lead into the third one, for the most important, again, for timing. And if Bitcoin does initiate that with a closure below at end of month, below about 38,000 bucks, well, guess where the 55 is? Just under 24,000 bucks, but that's very close to 23,000 bucks. You could very easily get a wick down, maybe even lower than that, towards 21 or so, and then close somewhere around the 55, because that is what this is essentially postured off as, the closures around there. So I think that kind of does it for today's analysis. Basically, that's a long way of saying above 45 good, below 37 bad, even below 38 is probably bad enough. And personally speaking, because I do look at 39,900 as like a big point of reference there, and below there I do look for price action to come back down to 37 or 37.5. Like that probably would be like the first major initial warning signal that this thing will topple on over. But technically speaking, if I'm going just off the straight TA, which I'm gay for TA, so I shouldn't be straight in this case. But if I'm going off of that, $37,000 would be sort of the area of which you would not just invalidate this as a potential ascending triangle and take out those last higher lows, but you start to, I'd start to be looking for that move back down to, low 30,000s, probably bounce along the way, 35 or 34.5 to 35 or so. Probably another one somewhere in here, and then, send it all the way down to the low 20s, I guess. So yeah, I think that's going to do it for today. I didn't really get too much into this over here. Should denote that funny rates are more or less null and void. Daily rates are negative 0.001%, which is nothing. Hourly rates are 0.001%, so which is also nothing. Not necessarily bullish nor bearish, really grasping at straws for that one. The one thing that I'm really putting a lot of weight on is the global open interest, as well as to a lesser extent the fear and greed index, to get an idea and a gauge of sentiment. But in this case, we do see that the global open interest, of course, is, getting to the areas that we haven't seen in a little bit of time, about a month or so ago. I don't really care too much about that. What I care about is the areas that have historically produced, some nasty violent downside swings, which typically is around, or especially above, 14 billion. So I put in alerts here for 13 billion right now, just to be aware of if and when we do get above there. That is obviously not like the critical mass area. That would be more north of 14 billion, but I want to start to have it on my radar. And then if Bitcoin were to, say get to any one of the critical areas, especially to the upside, like let's say Bitcoin played out a move to, I don't know, even here, $56,000, probably looking at like a 20% pullback from there. And where does that put Bitcoin? 45,000 bucks. Interesting, plays from range to range, which actually makes a lot of sense. Anyways, getting way too ahead of ourselves right now. And this video is already too long as well. I want to wish you well. Take care and see ya hopefully soon.